So now it's a low volatility environment and we want to look to do business at this area of support. But as you know, right, on a daily time frame, it can be difficult to time your entry at this area of value. So what we can do is go down to a lower time frame to time our entry. Okay, so let me just remove those levels to declutter the chart. Okay, so going down to the 4-hour time frame, what are we looking for? Again, we are looking for the stuff that you've seen repeatedly over and over again. So we're looking pretty much for a bullish reversal candlestick pattern, right, to take out this area of support, to take out these lows, and then close up higher. So if let's say I were to identify this area of support, be somewhere about here, right, waiting for the price to come into this area, take out the lows, and then close back above it. Let's see what happens next. So in this case, the market then come towards our area of support over here. This is where, again, right, your watch list, your signal should alert you, hey Rainer, pay attention. Okay, so now we have a slight bounce over here. Boom, right? There's another. Now we have this bullish reversal candle. This is what we call a bullish engulfing pattern, as this candle has engulfed the body of the previous candle. So at this point, you can look to go long on the next candle open. So I'll go a bit faster. You're already familiar. Let's just change this to green. Okay. And let's say our stop loss again is a distance below this low, say somewhere about here. Okay, change this to red. Okay, now I want to talk a little bit about targets. Right, as you know, this is a market which is in a low volatility environment, and you don't want to just capture that one swing, because what if the market explodes up higher in your favor, and then you just capture that 1R, that 50 pips, and that's it, and the market continues to move on, like maybe say 300 pips, right? So you're leaving a lot on the table. At the same time, right, what if the market moves in your favor and then reverse and then hits your stop loss, right? So you see your open profits turn to losses, right? Also not a good feeling. So what can you do about it? So this is where we can go with a hybrid approach. We look to capture a swing and ride a trend at the same time. So let's say, for example, we buy one standard lot of Euro Aussie, right? We can take 0.5 lots, take profit 0.5 lots just before this recent swing high. So let's say I just change this to blue. Okay, I just change this to blue. Okay, let's say if the market gets to this blue level, we exit half our position. So in this case, the market did eventually, reach this blue level. We exit half of our position. So half our position, we have book profits and it's in the money, it's in the bank, right? So we have another half of a position remaining. So the other half of the position, right, nothing changed. The stop loss is still at this level because this is where our trade will get invalidated. And it's either it hits our stop loss or it gives us a chance, right, to ride this new uptrend. So let's see what happens. So in this case, the market then can see chop up and down, breaks out higher, right, into this area of resistance, which is the yearly open, as you've seen earlier as well. Then it came back down lower, right, to our entry point. Okay, so you can imagine how difficult psychologically this can be when the market moves in your favor, go against you, moves in your favor. So when you take a portion of your position out in profits, psychologically it's going to be much easier to handle. Then you can see rally up once again, right, messing with your mind.